Hello, friends. If you're receiving Social Security or you're about to start, there are 3 direct deposit rules that most seniors have absolutely no idea about. And skipping them could be quietly costing you up to $1,500 every single month. That's not a small mistake. That's real money that should be in your pocket. I know that sounds hard to believe, but stick with me because what I'm about to share completely changes the way most retirees handle their benefits. By the way, I'm John, and welcome to John Retires. Real quick, drop a comment below and let us know, where are you watching from today? We love hearing from our community all around the country. Now here's the thing. The Social Security Administration doesn't exactly advertise these rules, and most financial advisors won't bring them up either, which means millions of seniors are leaving serious money on the table every single month without even realizing it. These aren't loopholes or tricks. They're legitimate rules buried in the system that you absolutely need to know. So do yourself a favor, watch this video all the way to the end, hit that like button if you want more content like this, subscribe, and turn on the bell so you never miss an update that could protect your retirement income. Now, before we dive in, I want you to really think about something for a second. You worked your entire life for these benefits. You paid into Social Security for decades, maybe 30, 40, even 50 years. And now that it's finally time to collect, the last thing you want is for a simple paperwork rule or a banking technicality to quietly drain money right out of your monthly check. But that's exactly what's happening to millions of seniors across the country right now, and the saddest part is most of them don't even know what's happening. They look at their deposit, assume it's correct, and move on. But if you're missing these 3 direct deposit rules, your check might be smaller than it should be every single month, and that adds up to a number that will genuinely shock you by the end of this video. So let's talk about rule number 1, and this one is probably the most overlooked of all 3. It has to do with your bank account type, specifically whether you're using the right kind of account to receive your Social Security direct deposit. Now, most people assume that any bank account will do. You give Social Security your routing number and account number, the money shows up, done. But here's what they don't tell you. Not all accounts are treated equally when it comes to federal benefit deposits, and using the wrong type of account can trigger fees, holds, and even deductions that quietly reduce the net amount you actually get to spend. For example, if you're receiving your Social Security payment into a regular checking account that has monthly maintenance fees, minimum balance requirements, or overdraft policies, you could be losing anywhere from $10 to $50 every single month just in banking fees alone. Over the course of a year, that's up to $600 gone, not because of anything Social Security did wrong, but because of the account you chose to receive the money in. What most seniors don't realize is that there's a federally protected account type called an electronic transfer account, or ETA, which was specifically created for people who receive federal benefit payments. These accounts are designed to be low cost, and by law, the fees are capped at a very small amount per month. On top of that, many credit unions and community banks offer what are called lifeline accounts, or benefit accounts, that are specifically designed to receive Social Security and SSI payments with 0 monthly fees. If you're currently receiving your deposit into a big bank account that charges you fees, switching to one of these options could immediately put more money back in your hands without changing a single thing about your actual Social Security benefit. It sounds simple, but this one change alone has saved some seniors hundreds of dollars per year. And when you're living on a fixed income, every dollar matters. Now, let's move into rule number 2. And this one is where things start to get really serious. This rule involves what's called your Direct Express card situation. And more importantly, how the timing and routing of your direct deposit can affect whether certain deductions are being applied correctly to your account. Here's what happens. When Social Security sends your payment, they're not just sending you a flat check. They're sending a net amount after a series of automatic deductions have already been calculated. Things like Medicare Part B premiums, any overpayment recovery amounts, or income-related adjustments. The problem is that a lot of seniors have no idea what those deductions are, how much they're being taken out for, or whether they're even accurate. And because the money just appears in their account automatically, there's no real moment where they stop and say, wait, does this number look right? Here's the truth. Social Security overpayment errors are far more common than the government likes to admit. And when SSA believes they've overpaid you, even if that overpayment was their own mistake, they have the legal authority to recover that money by reducing your monthly direct deposit without much warning. Many seniors receive a letter in the mail, don't fully understand what it means, and then suddenly notice their deposit is smaller the following month. If you've ever looked at your deposit and thought, that seems lower than usual, this could be exactly why. The rule here is simple but powerful. You need to be actively checking your My Social Security account online at SSA.gov every single month to verify that your gross benefit amount matches what you're supposed to be receiving, and that any deductions being taken out are ones you actually authorized or were properly notified about. If something looks off, You have the right to appeal. And in many cases, seniors have successfully gotten those deductions reversed and received back pay for the months they were shortchanged. And this is something John wants to really emphasize to everyone in this community. Do not assume the number that hits your bank account is automatically correct. Social Security processes millions of payments every month, and errors do happen. The seniors who catch those errors are the ones who stay informed, stay engaged, and take 30 minutes every month to review their account details. It's not complicated. It just requires attention. And that attention can literally be worth hundreds of dollars. Now let's talk about rule number 3. And honestly, this might be the one that surprises you the most because it affects a group of seniors that almost nobody talks about. People who are still working part-time or who have a spouse that's still earning income. This rule is about how your direct deposit amount can be affected by what's called the earnings test, and how failing to update your income information with Social Security at the right time can result in significant withholding from your monthly benefit, sometimes for months at a time before you even realize something is wrong. Here's how it works. If you're under your full retirement age and you're still earning income from a job, Social Security applies what's called the retirement earnings test. For every $2 you earn above a certain annual threshold, which in recent years has been around $21,000, Social Security withholds $1 in benefits. That withholding is applied directly to your monthly direct deposit, meaning your check gets smaller without any obvious explanation on the deposit itself. Now here's where people really get tripped up. Many seniors who hit this threshold don't report their earnings accurately or on time, and when Social Security recalculates, they may determine that you were overpaid during a period when your earnings should have triggered withholding. The result? They start deducting that money from your future checks, sometimes aggressively, until the balance is recovered. The way to avoid this is to proactively report any changes in your earnings to Social Security as soon as they happen. Not at tax time, not at the end of the year, but when the change occurs. This keeps your withholding accurate in real time and prevents those jarring, unexpected reductions in your monthly deposit. On the flip side, and this is something that a lot of people miss, once you reach your full retirement age, the earnings test goes away completely. That means Social Security will recalculate your benefit and actually increase your monthly payment to account for any months where benefits were previously withheld. But here's the thing. That increase doesn't always happen automatically and accurately without some follow-up on your end. Some seniors are entitled to a higher monthly benefit after reaching full retirement age and never receive it simply because they didn't know to check or didn't follow up with the Social Security Administration to ensure the adjustment was made. If you're in this situation, or if you think you might be, call the Social Security Administration directly, log into your My Social Security account, or visit your local SSA office. Ask them to confirm that your benefit was recalculated correctly after your earnings test period ended. For some people, this conversation results in an immediate increase in their monthly direct deposit, and sometimes even a lump sum of back payments for the months the increase should have started but didn't. We've seen cases in this community where seniors receive thousands of dollars in back pay simply because they asked the right question at the right time. That money was always theirs. They just needed to know to ask for it. Now, I also want to take a moment to talk about something that connects all 3 of these rules together, and that's the power of staying organized and informed about your Social Security benefits as an ongoing habit, not just a one-time thing you set up and forget. A lot of seniors go through the initial process of setting up direct deposit when they first apply for benefits, and then they never look at the details again. They trust the system to take care of everything automatically, and in an ideal world it would. But the reality is that your benefit amount can change for many different reasons. Medicare premium adjustments, cost of living increases, tax withholding elections, changes in your marital status, changes in your work status, or corrections to your earnings record. Any one of these can affect your monthly deposit. And if you're not paying attention, you might not notice a problem until it's been happening for months. The single most powerful thing you can do right now, today, after watching this video, is to go to ssa.gov and either create or log into your My Social Security account. From there, you can see your current benefit amount, view any deductions being applied, check your earnings history, and even verify that your direct deposit information is accurate and going to the right account. You'd be surprised how many people discover small errors in their earnings history that, once corrected, result in a higher monthly benefit. Your Social Security payment is calculated based on your highest 35 years of earnings. And if any of those years were recorded incorrectly, even by a small amount, it can affect your benefit for the rest of your life. Checking and correcting that history is completely free, and the SSA has a formal process for disputing inaccurate records. Friends, the bottom line here is this. Social Security is one of the most important financial lifelines available to American seniors, and you deserve to receive every single dollar you're entitled to. But the system isn't perfect. The rules aren't always clearly communicated, and the responsibility to stay informed ultimately falls on you. That's why we're here on this channel, to make sure you have the information you need to protect your retirement, ask the right questions, and never leave money on the table that belongs in your pocket. If you found this video helpful, and I genuinely hope you did, please hit that like button right now. It takes 1 second, but it makes a huge difference in helping us reach more seniors who need this information. And if you haven't subscribed to John Retires yet, now is the time. Hit that subscribe button and turn on the notification bell so you never miss a video. We publish content regularly that is specifically designed to help retirees navigate Social Security, Medicare, benefits, and everything in between, in plain language that actually makes sense. Share this video with a friend or family member who's receiving Social Security, because chances are they need to hear this too. We'll see you in the next one. Take care of yourselves, and remember, your retirement should work for you.